Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Jay Taylor of Jay Taylor's Gold, Energy and Technology Stocks. Jay, thanks for being with us.
Good to be with you again, Scott.
So I wanted to talk a little bit about the larger market, the US market, the Dow. Things have been going very well for the last few years, contrary to what's been happening with gold and the junior mining stocks.
Right.
Where do things go with the US market?
Well, the U.S. market could continue to rise, I suppose, as long as people believe that the system is viable. What we do see, though, Scott, is that all this quantitative easing is not getting into the real economy. I put together something called my inflation-deflation watch, and in that is it's comprised of U.S. stocks, Indian stocks, Chinese stocks. Within the stock market, then there are breakdowns like key sectors like autos. We're looking at retail stocks, at real estate stocks, and things like that. So the U.S. sector is doing well. But if you look everywhere else, the equity markets are not doing well in China, in India, and then the commodities that are in my IDW are not doing well. So since the peak in 2011, the only thing that's really done well are the U.S. stock markets. The U.S. economy has been sucking wind; it's gone nowhere. And Chinese stocks have been abysmal. Indian stocks have not done well; they're down. So what I think it's saying is that the only thing we have is really the last bastion of this fiat money printing system is in the United States. And I think when that goes, I think we have possibly a cataclysmic decline in equity prices, which then will bring about a huge increase in money printing. Now, I think the Federal Reserve is scared to death. I think at least Jim Rickards, who I have on my own radio show, says he's spoken to certain people in the Fed, and they're very concerned about quantitative easing in the Fed's balance sheet. The Fed's balance sheet is really underwater. It's insolvent now if they were marked to market, because the slight increase in interest rates mean that the Fed's actually lost money. They don't have any equity, really, honestly, but they don't mark to market. They pretend and extend, essentially. And so for the time being, Wall Street feels good, but they're really addicted to more money printing. So I think that is very bullish for the stock market short term, but all it's really doing is creating more of a problem for the real economy and for the global markets as a whole. So what I think we're going to see, I think this is very bullish for gold, because I think every time the markets throw a hissy fit, it's more money creation, more destruction of the existing system. That's what I think is happening.
So Jay, the question is when? When do you think that this might happen?
I think it's going to be ongoing, Scott. I think what happens is the Fed wants to get out of the quantitative easing business, but it doesn't quite know how. I think what the Fed will do is as they have, they've cut back 10 and another 10. I think they'll probably try to cut back again and see how it goes. And I think if the market doesn't crash, I think they'll continue to taper. My belief is that the equity market is so addicted to easy money that the equities won't do well when they really taper and continue to taper. So my belief is there's going to be an ongoing stimulus, ongoing QE, and honestly, I think the next time we see gold really starting to rally could be around July, August, something like that, when it's not only a tapering is off the table, but we're starting to see an increase in quantitative easing. That's my prediction. We shall see.
That early?
Yeah, and I think actually there's Charles Nanner is a very highly regarded technical analyst, medical doctor, lives in Amsterdam, does work for Goldman Sachs and other people. His cycles are suggesting August 8th as the bottom for gold. Now, whether gold goes down a lot from here I don't know, but at least he sees that as the bottom of the cycle. So my thinking is, if you combine that with what the Fed is likely to do, it seems very tenable to me that we could start to see the return of the cyclical bull market within a secular bull market that has never ended. I think sometime this summer, very, very possible.
And what's your take for the gold stocks now? Is it a watch and wait from now through to the summer, or are you selectively recommending and picking up various companies?
Well, I think you need to be selective. I think you should always be selective. There are those people that say they'd like to see this equity market and the gold shares suffer a little longer, so we get rid of some of the chaff. And also, another person that I've had, a CEO of a company, says he'd like to see some more weakness in the market so he can pick up some more quality assets. This is a company that's well funded. So I don't know. I think there's some great stories out there. There's one I'm looking at in particular that is a It's a new model. It's a Witwatersrand look-alike that I'm telling my subscribers about. There are a lot of others too. Project Generators have bounced back very nicely, percentage-wise, because they didn't issue umpteen million shares to stay alive. And then the producers and some near producers. So I think it's, listening to a talk by Rick Rule was talking about, this is bargain. This is bargain territory. You would like it very much if you were buying a Lexus and the price was $80,000 and it dropped to 20. You would love it.
Yeah.
Well, love this. These are stocks on sale now. I think there's some wonderful opportunities out there. I've never been more excited about this market.
Yeah.
I'm an old guy now. I don't get excited as much as I did when I was younger.
Well, you've been writing this publication for over 30 years now.
1981.
1981,
Right.
yeah. And this is the most you've been excited you've been about the sector since then.
I would say that's true.
Wow.
I would say that's true because I think we had a 10-year run of rise in the gold price. That brought a lot of money into the market. A lot of work was done. I think there's a lot of companies out there that have something real, and 10 years gave a lot of time for management and people to develop their skills and technical skills as well. So I think we're getting ready for the final leg up in the bull market, which could go another 4 or 5 years, I think.
Yeah.
And then we're going to look at something, I think, that's spectacular. But, of course, there will come a time to take profits, and that's sometimes the most difficult thing is to sell the things that have been so kind to you.
Yeah. Well, I've been buying since January. I'm going to continue to buy. I think that summer there is going to be a rally there too. What specific companies? Was there anything you would like to mention or recommend? Not necessarily recommend, but mention that you've followed or?
Yeah, there was one actually I mentioned in my talk here at the PDAC, and that is Novo Resources. And Quinton Henning is the geologist there. And
he's phenomenal.
He's come up with a theory of the Witwatersrand, and it makes a lot of sense. And their early work has been very successful. They've got a 43101 resource of 420,000 ounces, 1.7 grams per ton. It's a flat-lying conglomerate deposit, very shallow, as I say, flat and easy to mine. And that's really one of my favorites. As a matter of fact, full disclosure, it's my largest holding in my own retirement account.
Nice. I own some of that one too.
I think it's going to be phenomenal. I think there's a lot of others too that are out there that are just companies that I think are worth looking at. Producers, cash flow positive companies.
Well, and this is what I was saying actually when I was talking with Greg McCoach in another interview, that what typically happens and when the markets are hot, say 2011, you have a significant number of subscribers all waiting for that next recommendation. When the markets are bottom, you don't have nearly as many people listening to you when they should be, because now's the time where you find these kind of deals that have the opportunity to go up a multiple of the share price, 2, 3, 5, 10 times the share price.
Absolutely.
So what I say is it's very wise for people to read your publication and the other publications, which is what I do.
Well, I think that's right, and the key, of course, is knowing when the bull run is going to come, and nobody knows that. That's what makes it so difficult. They don't ring a bell at the top, and they don't ring a bell at the bottom. So I suppose, but you have a sense that, when things are overvalued, and I think wise guys like Rick Rule and others have been around the block many times, and when they are selling and they're suggesting everybody else should sell, I think you should take notice. And I don't know how many conferences I've been to, we're having really enjoying the party, and Rick says, I think it's getting a little rich. I think it's time to take some money off the table. I'm saying, no, not yet, Rick.
Right.
But he's usually right. So,
and that's not what he's saying now.
No, not at all.
Yeah.
No, now I think although I think Rick believes that we could see another dip. But, again, keeping in mind, gold started out at $282 in 2003, got up to $1,900, and we've seen a pullback, which is very natural. 10 years in a row, the price of gold went up. It's not unnatural, whether it's manipulation, whether it's tapering fears, whether it's just a correction in the 10-year bull market. I don't know. It doesn't matter. The point is, until the debt to equity situation gets back to normal, I think we're in a bull market for gold because capital is being destroyed and people are demanding. People are demanding that we go back to real money, and that's gold.
Yeah, I agree. Well, thank you very much for being with us, Jay.
My pleasure,
really
Scott.
appreciate your time. Again, that's Jay Taylor of Jay Taylor's Gold, Energy, and Tech Stocks. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.